normally they're giving you, you're giving a return on their equity at the yield that they're buying the stock at, so it might be at 4 or 5%, whereas the developer doesn't have to go off and get UK clearing bank debt at, say, 10% all in, or an opportunity funding the equity at 15, 20%. So it's a lot beneficial to the cash flow. So actually, it works for all. And back to Andrew's point about getting supply, do you have to go further afield to get your 5% returns? I'd argue not. We're doing, we closed obviously the Tribeca Square deal down in Effin Castle with APG and Delancey end of last year, and we've got another one under offer and due to actually complete in about 2 weeks' time in Zone 2 for 1,000 units, and that's with an RP. And the key for those two deals is the scale of it. So if you're trying to target 100 unit schemes, it's quite hard to stack up the numbers for developers, whereas if you're looking at the much larger schemes, for example, the one we've got closing hopefully in 2 weeks' time is 1,000 units, 500 will be for trade and half 500 will be for PRS. And as a result, you can get through the stock a lot quicker, you can create the place, and the developer is very keen to tie up that deal because you can obviously gear higher because you've got a good covenant coming in to buy those PRS units. And the discount to VP is actually very small because a lot of the institutions we're speaking to are happy to underwrite rental growth of, say, 3 or 4% per year through the development period. And when you play that against, so say they're pre-committing to purchase at a 4.75% yield with the growth, actually when you compare that to VP values, there's very, very little difference at all because the developers who are building out to trade or buying sites to build out to trade won't underwrite any capital growth, and as a result, that margin gets closer and closer, and therefore PRS players become very competitive.
Alex, I think it's probably fair to say it's taken 2 years probably on both of those transactions.
1, 2 years, 1, 2 months.
Sorry. Yeah.
So, I mean, it's and there are obviously the RPs. The big RPs are very competitive at the moment because their grant is being pulled away and they need to cross-subsidise their affordable housing programme by getting into units to trade as well. So they're happy to do both.
Yeah, and so in terms of strategy for people who are looking at London, and really what you're saying is is that you need to look at really big lots.
Yeah. I mean, CBRE, the investment and funding team that I'm in, we are targeting very large schemes around the country. We're working for another example, we're working for a very large landowner in the UK, and that particular company gets planning consents for normally schemes between 5 and 10,000 units per plot, per development site. And he normally parcels it up, puts the infrastructure in, ships it out to the house builders when it's all fully serviced. Whereas we're saying to him, we can churn through your land quicker, give us a plot of say 500 units for PRS. We're actually designing it for the first time specifically for PRS with a mind to break up into an own occupation route, but it's going to be clearly more designed for rental product, and that's it's pleasing him. He can churn through his land quicker, and we can bring in the institutions who are aiming for the regional market, like Patrizia and the other big institutions.
Yeah. Alex, that 500 in the rented, is that sub-market rent, or is that PRS rent?
That's all PRS.
It's all PRS, so there's no affordable in it.
Yeah, I mean in London you don't really have that choice because of the cost of money and how quickly you want to get on site. Designing for PRS, you can only make small tweaks, whereas out of the regions you've got more time to play and you can actually design it more for a PRS product.
And how do those developments work in terms of having to include social housing or those kinds of things?
Yeah, I mean, it depends. I mean, some of the private investors, they won't want to touch the affordable, whereas the big RPs, they will have to take on the affordable as well. It's part of the condition of the deal that they won't do the deal unless they get the affordable housing as well. It's part of their sort of board approval process and what how they've raised money and promises they've given to their investors.